Going over the portfolio calculator today, big drawdowns the last 5 days. You can see some of the trades here. We had some winners and losers, but mainly losers. Adaptive moving average was very active. I have an update for that I'll be sending out that helps you reduce the inactivity of that if it is too much. But extreme scenario with a surprise Fed rate cut that hasn't happened since 2008. And these 1,000-point swings in the Dow and $100 moves in gold, they're not the normal. They might be the new normal, so we're monitoring the situation. But I want to take a look at what's working and what's not working in the portfolios. The latest update, we are right near a worst-case drawdown. Here's the max drawdown. Here's the current drawdown, 22,862.50. And when you look at the past, there have been drawdowns this fast. You see these fast spikes down right here. Right there is one. This is a very fast spike down, and it's similar to this one. And it doesn't show you, so we are right here. This is the worst drawdown point. Let me see. So this is the worst drawdown, 23,577, and the current drawdown is over here at 22. So it's been here before, and it could exceed a worst case drawdown because volatility is higher. When volatility is higher and daily ranges go higher, your worst days and your drawdowns are going to get bigger, and your best days, largest winning days and largest losing days are going to be bigger in the future if you do the same things. And so we're working on modifications as we go, but this is where we are. And I'm going to go over each of these. I'm going to show you a portfolio setup that has been working. I've been talking about how the counter trend strategies have done much better than the trend strategies. But let's look again at the monthly results. So up 13K in January, up 16K in February based on the new changes that I made at the end of the month. That's only two strategies that changed slightly for this setup, and the stock index portfolio 19, and down 10K so far in March. And so sometimes that happens. You see May minus 12K, July minus 9K, and those don't necessarily include losses towards the end of the month. So there was a losing streak at the end of February, and then it continued into March, and so our drawdown is down, and that is where we are. I'm going to upload this latest portfolio calculator so you can see the latest results. Stock index portfolio 38. It's halfway into a worst case drawdown, a little bit past halfway, and so that's normal as well. A little bit more room, a little bit more diversity in this portfolio setup. This is updated through 3/3. I need to change that. I just updated it, and you see that it's down. It was up 15K in January, 31K in February, and it's down 13K in March. And so these are buy signals. If you're trading it right now, you see these sharp spikes down, and if you go through that drawdown, it may make you second guess it. But if you're sitting on the sidelines and waiting to get in or add contracts, depends on your capitalization, depends on your risk tolerance, you look for these drawdowns to get in. So these are actually buy signals to get in, and this is a good place to add contracts if you're looking to add contracts, if you have the capital, or if you're looking to start. This is where you want to start on these drawdowns. Now the 200K portfolio, let's take a look at that. It exceeded its worst case drawdown already, and so it can do that. Sometimes it's already done that in 200K. It could do that in the stock index portfolio. We have new levels of volatility. We have gains on the year to buffer that though. So 21K in January, 15K in February, and down 10K in March. And let's take a look at how that drawdown looks. That's pretty sharp, and I'm looking for a bounce back. No guarantee that it will bounce back tomorrow or the next day, but we're making adjustments as we go. And so I always like to get in. It's kind of like your stop getting run. You look for that point where it runs your stop, and then that can be the good entry point. And so that's the 200K portfolio setup. Let's look at the 100K liquid day trade portfolio. It's in a 13K out of a 19K drawdown. Let's look at the drawdown curve and where it is. It's down 5,200 on the month, and it made 16K in January, 15K in February, and you see that fast drawdown. These fast drawdowns happened in the past, and it's faster. It's a little bit faster now, maybe because of the volatility, and so you imagine that the drawdowns and run-ups will be faster and larger in the future. And so we're going through a drawdown process right now. So let's look at the liquid day trade portfolio. 9K drawdown out of 24K, and you see it is down 4,500 on the month, and you see the drawdown curve. It kind of goes in cycles, and so it had equity peaks with very little drawdown right here, and now it's in a sharp drawdown, which is normal. Now I've added the SR counter trend 2. Now this is a portfolio setup that includes all the SR counter trend 2, 3, and 4 strategies. And so I've talked about how the SR counter trends have outperformed the trend strategies, the counter trend strategies. So if you look at it, it's only in a $2,800 drawdown out of a $29K drawdown. Requires 125K to trade it. Let's look at the year and month. Up 17K in January, 21K in February, down 21K in, or it's down $2,800 in March. And so you see the drawdown curve. You see it's had sharp drawdowns in the past, but this kind of market environment is more favorable. Oftentimes when the ranges are wide and whipping, getting in on a counter trend move can be more beneficial than a trend move, because there's so many retracements in this market. So this is the portfolio calculator setups. Let's look at the 25K portfolio. We've adjusted this gap continuation. It's a 53.20 drawdown, halfway to its worst case drawdown. We had a worse drawdown with the old gap continuation, and so we've adjusted to the new gap continuation. And so this is let me show you the results here. It had a nice year, 8,700 and 2,500 in February. This is a 25 to 50K portfolio, down 1,370 this month. And the drawdown did start at the end of February, though. It was up more in February, then it had this drawdown, and so you can see it's had drawdowns to these levels quite frequently. So those are all the latest 2020, and we can look except for the all strategy. The others are 2019. And this is the old 200K portfolio from January and February. It's also at a worst case drawdown, and we have the all 74 strategy access. And so it's down. It's 30K into a 40K drawdown. So if you're trading all these strategies with the 5 new strategies, these are the old strategies not included that in this calculation right here. But you could also trade those as well. These are actually strategies that I'm working on adding, so they are not effective right now. If you add a 1 there, it won't add these. I'm working on adding these. And then, so you see the all strategy access, minus 13K. It started its drawdown in February as well. So it went to about a 17K drawdown in February. So you see this sharp, fast drawdown, sharp, fast drawdowns, sharp, fast drawdowns. And so these drawdowns happen. And that is the update today. A lot of questions on the portfolio. We've had a nice start to the year. January and February were very nice. It can give you recency bias and make you think that this is the way it always is. And we go through drawdown cycles too, and this is part of normal trading drawdown cycles. And if we're in a new regime, we're going to have to make some adjustments and handle the volatility and manage it. So that's what I'm doing. I'm in contact with you. I have some updates as well that I'll be sending you. Additional updates, adaptive moving average, to potentially update this either late tonight or tomorrow.